What is up, everybody? Dan again, Stocktrades.ca, back at you with another video. So a few months ago, I made a video on two high interest savings ETFs here in Canada. They are cash.to and hsav.to. And for the most part, I expected this video to be relevant for quite some time, but the situation has changed quite a bit, particularly with hsav and the fact that it suspended subscriptions back in early 2022. I didn't discuss the overall impacts of what that means to the fund in that video, so I wanted to do it here. So I'm going to go over these ETFs again, which yields have risen. They're now over 5%, which is absolutely crazy. But I also want to talk about the premium to net asset value that hsav is trading at, the overall risks of doing that, the overall potential rewards if that premium were to rise. And I'm going to explain this in the simplest way possible in terms of ETF liquidity, how an ETF works, and why you are seeing this fund trade at a premium, and why it could work out to be a extended risk of owning the fund or potentially an extended reward. So let's dive right into these two funds again. If you didn't watch the first video, I will drop a link to it here. It's still very relevant on the basis of these two funds. The only difference is going to be in this video, I am going to talk about hsav and its current situation due to suspended subscriptions, and the yields have jumped in relation to the video I filmed back then. So everybody, before we start, we are starting a new series over at Stocktrades called Market Mindset. They are going to be 1 hour sessions that are going to go over particular research, market commentary, investment strategies, investment mistakes. Our first one is going to kick off with the 3 biggest dividend mistakes we see investors make. It is absolutely free to attend these. I'll put a link in the description. There's no gimmicks, free to attend. You just have to register, and the event is at March 7th at 1 p.m. Eastern Time. You don't have to attend it live. You will miss the live Q&A, but you will get a recording after it's done, and you'll be able to watch Matt, who you haven't seen on the channel for a while if you've been a subscriber. That is because he's going to be focusing on these market mindset events. So in the description, you can register below. It's going to be one you're not going to want to miss. So the elephant in the room right now is obviously the suspended subscriptions of hsav, what exactly it means, whether you should buy it or not today. And in order to understand what all of this means, the premium to NAV, the suspended subscriptions, we need to understand how an ETF works. So unlike a mutual fund, which takes investor capital, pools it together, and buys underlying stocks, ETFs, whatever it may be, fixed income, an ETF has what they call an authorized participant who essentially regulates the units of an ETF. So a lot of people have the misconception that if an ETF itself has little volume, that there is little liquidity there. And this just isn't the case. In fact, one of the main drivers of ETF liquidity is the liquidity of the underlying holdings. So let's say, for instance, we want to buy an ETF and it has one holding. All it holds is Royal Bank, and this ETF is not traded very often. You could have a situation where you want to buy that ETF, and the authorized participant will in turn buy a share of Royal Bank. They will go to the fund creator, and the fund creator will issue a unit of that ETF. So even though there is not much liquidity in terms of actual ETF volume, because the underlying holdings have volume, you in turn can still buy and sell that ETF. So why is this relevant on things like hsav and things like cash? Well, the underlying holdings are essentially cash. It is cash inside of high interest savings accounts at National Bank, Canadian Western Bank, CIBC, banks like that. So it's relatively easy for these funds to remain liquid because the underlying holdings are pure liquid. They're cash virtually. So say in this situation you wanted to sell your hsav, you will be able to get the net asset value of that unit, because even if there would be no volume, the AP could go to Horizons. Horizons would pay the cash out from those savings funds, and the units would be eliminated. So this is exactly why these funds are fairly liquid, and you can get the net asset value of the fund pretty much regardless of the underlying volume. There are some very rare instances where this isn't true, but for the most part, with a fund like hsav, it is so liquid that Horizons pretty much guarantees you'll be able to sell the fund at the net asset value. Now, here is the difficulty. The units have been suspended. What this means is Horizons is not creating any units. So if you want to buy HSAV right now, you are buying it from somebody who is looking to sell it. So this has created a premium in relation to its net asset value. Because if you want to buy this fund, the AP can't go to Horizons and say, hey, create some more units for me. This person wants to buy this fund. No, instead, you have to go to the secondary market. And somebody who is selling HSAV may want a premium, and you have to pay that premium to own it. Now, on a quick note, Horizons has said that once the fund gets down to around 1.5 billion in AUM, it's at around 2 billion right now, they will resume subscriptions. With the rates that are currently being offered, I don't see this happening anytime soon. I don't think anybody is in a rush to the point where the assets under management are going to dip by 25% nearly to sell this thing at these interest rates, that is ever going to happen anytime soon. So if you're looking to buy HSAV, you will have to get comfortable with the fact right now that you are paying a premium to the net asset value. So now let's actually focus on how this whole situation could put you at risk of potentially losing money with HSAV, especially if you're looking to hold it short term. So if we go to Horizons website right now, we can see that at the time of filming this, the price of HSAV is $106.24, while the net asset value is $104.55. This is around a 1.59% premium to the net asset value of the fund. So if we're looking to buy HSAV, we can go on to our brokerage, whatever it may be, Wealthsimple, Q-Trade. Again, you are not allowed to buy these high interest savings funds at particular big bank brokerages. For the most part, they want you to own their own products. But say you're on Wealthsimple, you want to buy HSAV, you put it in order and it goes through at $106.24. You've bought that off somebody else who is looking to sell it. So let's say you hold it for a few weeks. You're like, oh shoot, I actually need that money right now, and you go to sell it. If there is no buyer for that fund at the current premium to net asset value, you are going to be dealing with the net asset value of the fund. So if you sell and there's no volume at that premium to the NAV, you are going to get $104.55 in this situation. So you've just bought a high interest savings ETF, which, as we can see at the time, yields 5%, and you've just taken a 1.59% loss on your money. So this is very, very important to keep in mind. Now, we've had a lot of Stocktrades premium members who have bought hsav and sold hsav. There has never been a situation where they were not able to get the premium to net asset value. However, it is not guaranteed. And for this reason, Horizons explicitly states, as you can see on the top banner here, they've suspended new subscriptions after reaching 2 billion in assets back in February of 2022, and they do not guarantee that you will get this premium to NAV. Now, I know you're probably all wondering, do I think you should buy HSAV right now? And obviously this is only my opinion. I cannot guarantee the price action of this fund. I think it will remain popular enough now that the premium to NAV will actually likely widen. Even when I did the video before, as you can tell, I'm going to take a snapshot of that video and where I speak on hsav, the premium to NAV is a lot narrower than it is today, than it is for the $106.24 to $104.55. So if this fund remains popular, I can only see this gap widening, which means that there is a chance, and again, I do not guarantee this at all, that you could actually end up earning more than 5% annualized on this fund. And the reason for this is, say if you bought at $106.24 today and the gap between the current price and the net asset value rises to more than 1.59%, you're going to pocket that difference if you can sell it at that premium, which if the fund is popular enough, you should be able to. So there is a little bit of reward there, but again, there also is risk. If you're looking to buy, $100,000 of this fund and you quickly realize that you actually need to sell it, and in a month's time you sell it and you can only get the NAV, you've just lost around $1,600 in a little over a month on a fund that is virtually no risk. So that is something to consider. So now that I've spoke about the risks with buying hsav right now, let's just go over cash and hsav a little quicker detail. If you want an in-depth look at these funds, the only thing that's really going to be different is the premium to NAV for hsav and just overall the yields. They have gone up since. I will link again to my older video, which will explain these funds in detail. I just want to, in this video, go over some common misconceptions, a lot of questions I'm getting in terms of these funds. So first things first, cash. There is a lot of people who are asking me, when should I buy it? Should I wait for the distribution to be paid? Should I wait until the distribution is at its maximum so I can get paid out right away, that full, whatever it may be, 20 cents per unit? And the reality of the situation is, tax implications aside, it does not make a difference. So the functionality of cash, what it is, you'll buy a unit for $50, and over the duration of the month, that unit will increase in value up until the distribution is paid out. And at that point, it will dip in value by that distribution. So a lot of people seem to think that they need to buy it right after the distribution is paid out so they get the cheapest price possible. But it doesn't make a difference, because if you think about it, you're waiting 30 days to gain that full amount of the distribution. Whereas somebody buying it midway through the month, yes, half that distribution is going to be already factored into the share price, but you're also going to accumulate the other half over half the time. So in terms of overall collection of distributions, there is no difference as to when you buy this fund. Now, as of January 26, 2023, it has a gross yield of 5.02. I think it has management fees of around 0.1%. So you're getting in the high 4.9 range right now. And this fund has become insanely popular. We can see that it has volume of, almost 111,000 shares a day. There's a lot of people buying into and selling out of this fund right now, and that's because it provides nearly 5%. Now, this is not a completely risk-free rate. So as I mentioned in the past video, it doesn't have CDIC protection, which means if the underlying institutions, that being banks like National, banks like CIBC, Canadian Western Bank, if they go bankrupt, you would lose your money because there is no CDIC insurance on these funds. However, this is a near risk-free rate. I don't think those banks are going to go bankrupt anytime soon. So when you look at dividend stocks, creating a strong portfolio of dividend stocks in the 4 to 4.5% range, if you're an investor who is solely focused on the income and you're not necessarily worried too much about capital appreciation, then this fund, it's going to be very popular. It's going to pay you nearly 5% with almost no risk of losing your initial capital. And it's also a very popular option just due to the liquidity of the fund. You can stick emergency funds or down payment savings or car payment savings in these ETFs, and under normal market conditions, you'll just be able to sell them for the net asset value. So that's why both these funds have grown in popularity quite substantially. Now, when we look to the overall volume of hsav, we can see that there's a lot less volume on this fund, and that is due to the premium it trades at. Cash has virtually no risk besides the default of those major institutions, but hsav has another element now. It has that risk of the fact you could have to sell this fund for less than what you paid for it because you're paying a premium to its net asset value. So I hope this video cleared the air on these high interest funds. They are excellent options. You just need to be aware of the added risks of hsav. Again, in the description, we have the link to register for our upcoming market mindset presentation with Matt, which will discuss 3 key dividend mistakes. It is March 7th at 1 p.m. If you liked the video, if it helped you out, especially the situation with hsav, if you were wondering whether or not to buy, whether to sell, smash that like button, head down below, subscribe to the channel, and we will see you in the next video.